Good morning, ladies and gentlemen, and how do you do? I'm your host, Seth Julian, welcoming you to today's morning briefing. We're looking at the U.S. dollar index, aka the Dixie, because the symbol is DX. So it's the Dixie, and you will notice, you can't but notice, how strong the U.S. dollar is, particularly as I've marked on the chart from the outbreak of the NATO-Ukraine war in February 22nd, 23rd. It is up 12.76%. on what looks to my eyeballing about 35%, and here toward the last few weeks, about a 35-40% increase in volume. Well above all of our moving averages here. This is the 20-day, the 50-day, the 200-day. So it's way, way above average. Value is very high on high volume, indicating a likely sustained trend. Now, the point I'm bringing today is this. Dollar is king is a term you hear a lot about these days because it is. The U.S. economy, despite its inflation and despite rising interest rates, is barreling along. Last Friday, we had a terrific NFP report, very positive, in the 300,000 plus, about a 25% increase above expectation. And despite the inflation, and despite high prices there, and despite interest rates rising to counter those high prices, the U.S. economy is very robust. Unlike Europe and Japan, which is, of course, not only on its knees, it's under house arrest is what it is. This is the only game in town. And as such, people are rushing to buy dollars. And therefore, the dollar index is going up. And they're doing that not necessarily to buy stocks, which are not doing so great, and we're going to start to see that come truer and truer come the earnings season report rollout, but simply because of what's referred to as the carry trade. As interest rates rise, you can make that return in interest simply by holding the currency. You don't need to trade, you don't need to buy, you don't need to sell, you just need to buy dollars and let them sit there and accumulate the interest, providing that interest rate is above the inflation rate. Otherwise, if it's not, you're suffering a real loss. But we'll leave real and nominal interest rates and profits aside for the moment. What we're focusing on is the strength of the greenback. And here it is in completely graphic detail, 12.76% since the outbreak of the war. That's 141 days. So, ladies and gentlemen, with that observation, we're going to take leave and wish you all the ability to trade with confidence. I'm your host, Seth Julian, wishing you bye-bye for now.